Hello, welcome back to Oak Business Consultant. Today we have brought you another financial model. This one is architecture finance model. Um, this template basically goes up to 60 months of forecasting um, of income statement, cash flow statement, and balance sheet, as well as its detailed revenue streams. If you see over here, the how to use. This basically tells you about the peach cell, tells you the input cells, whereas the gray cells tells you about the formulas result, and the light gray font gives you the helping cell. Coming towards the input sheet basically tells you about the all assumptions that are being taken over here. This includes the investment, loan, cost of goods sold, and the revenue streams of the business, as well as the employee payroll and um, capital expenditures and OPEX, operating expenditures. When it comes to revenue analysis, the revenue analysis sheet basically gives you the main information. If you see over here, just give me a sec. So if you see over here, you can see it is calculating the revenue from each of the revenue streams and then giving the total of the total revenue, as well as it gives the total cost of goods sold on these revenue streams. Then comes the startup summary. The startup summary basically tells you about the summary of the company in the first year, where it basically gives you the difference over here, that you can see the total fundings and its total expenses. This basically tells you how much funding you would be required in the first year. Then it also gives you the a small brief first year balance sheet, which gives you the total assets and total liabilities and equity of the business. It gives all the information in graphical context as well. Then comes the depreciation table. As you can see over here, the depreciation table tells you about the depreciation of the business on the non-current assets of the business in next 5 years on monthly basis and yearly basis. Then comes the monthly income statement. This basically gives you the income tells you about the profit that the business is earning at the end of each month. The yearly profit and loss statement or income statement basically gives you the profit of the business at the end of each year, and it is also showing it in graphical context. Then comes the cash flow statement. The cash flow statement basically tells you about the cash inflows and outflows of the business from its operating, investing, and financing activities. As you can see over here, these are being labeled. It also gives you a bit of calculation on the payables and receivables of the business, and the shows these information graphical context as well. Then comes the balance sheet. The balance sheet basically gives you the total assets compared on the company's total equity and liability. Then comes the revenue break-even analysis. The break-even analysis just gives you the break-even sales. As you can see over here, these sales are being provided by the business. Then comes the sensitivity analysis. The sensitivity analysis basically gives you three different scenarios and calculates the business net income on these three scenarios, which are optimistic, pessimistic, and moderate, as you can see over here. Then comes the diagnostic sheet. The diagnostic sheet basically gives you a brief diagnosis on the business performance, on its profitability, on its operating expenses, on its cash flows, and its break even. Then comes the project valuation. This gives you the tells you about the expected equity percentage that can be offered to the investors, and a few relevant information such as IRR and NPV of the company in the next 5 years. Then comes the dashboard. This sheet basically gives you all the information in graphical context, which can be used by the financial analysis to give and provide with detailed and quick uh, information. That's it. Thank you very much.